Hello, welcome to the European Open Briefing for Thursday, July the 27th. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be looking at the latest developments in the currency markets today. So we had the Federal Reserve's monetary policy meeting yesterday, and what was supposed to be a non-event turned out to have quite a big knock-on effect in the currency markets. The Fed, as expected, kept rates unchanged and signaled that it will start its balance sheet reduction relatively soon, but we saw a big drop in the US dollar against pretty much all other currencies. This is because the Fed sounded a bit more concerned about the current decline in inflation than it had been more recently, and this reduced expectations of a third rate hike later this year. So we're seeing the euro surging to 2.5-year high. Even the pound, which had come under some pressure yesterday from weak GDP numbers out of the UK, is now back above the 1.31 level. Commodities are doing rather nicely because, of course, the weaker dollar makes commodities priced in dollars cheaper, and commodity currencies, the Aussie, the Kiwi, and the Canadian dollar are also sharply up as a result, and gold and metal prices are also doing well as well, extending their recent gains. So let's have a closer look at what we heard from the Fed yesterday. We didn't have any press meeting by Janet Yellen, so it was pretty much just a statement. So as expected, the Fed said that they will begin reducing the balance sheet relatively soon. So this potentially means that we could have an announcement at the next meeting in September. But the biggest surprise came from the tweaks to the wording used on inflation. The Fed said that inflation has declined and running below 2%, as opposed to what it had been saying in the previous statements, as its inflation is running somewhat below 2%. So this is now the Fed pretty much acknowledging that the inflation is well below uncomfortably below 2%, and perhaps it's also a sign that it's no longer confident that the current decline is just temporary. So we're seeing the odds of a year-end rate hike drop back below 50%, and we can see the effect on the dollar yesterday. Dollar yen fell very sharply. It briefly spiked to above 112.19. That this is when investors saw that the Fed has confirmed that it will start its balance sheet reduction soon. But then, of course, once the investors read the statement in more detail, they saw the changes to the language on inflation. So we saw that big drop. It's over 1%, and it extended its declines earlier today to 110.75. It has appeared to pare back those losses a little bit at the start of European trading. Currently, it's back above the 111 level. The dollar index dropped to a fresh 30-month low of 93.15, and we can see the broad declines against other currencies. The euro surged to its highest since January 2015, hitting 1.1776. The next target is now looking the 1.18 level, but if you look at technical indicators, the euro is looking extremely overbought. The pound hit a 10-month high, 1.3156. Yesterday we had the first estimate of second quarter GDP growth. It was at 0.3% quarter on quarter. This was within expectations, but it still represents the weakest first half growth since 2012, and this is mainly being attributed to the uncertainty being caused by Brexit, but the weaker dollar for now is helping sterling. Looking at the Aussie and the Kiwi, we can see both currencies are looking very bullish. The Australian dollar hit a 2-year high of 0.8065. It's the first time it rose above the 0.80 level since May 2015, and this brings the previous top of 0.8162, also in May 2015, was in sight as the next possible resistance level. The New Zealand dollar hit also a 2-year high of 0.7558. The next potential target is the 0.7580 level. Looking at commodities, because obviously a weak dollar and weaker US yields are positive for commodity prices. Oil, of course, yesterday we had the weekly inventory numbers from the US Energy Information Administration. We saw a bigger than expected drawdown of 7.2 million barrels for US crude. Expectations were for 2.6 million. Gasoline and distillate stocks were also down. We saw US crude hit an 8-week high of $48.93 a barrel, and Brent crude topped $51 a barrel. And this is also positive for the Canadian dollar, since Canada is a major exporter. We're seeing the loonie at a 2-year high of 1.2412, although it has come off those highs today as the dollar pays back its losses. Looking at metal prices, the precious metal gold is at a 6-week high. It approached the $1,265 level, and this comes despite the fact that we have risk on sentiment today. Global stock markets in Asia, at least, were boosted by the Fed's statement yesterday, as it means lower US rates for longer. But despite the risk on sentiment, the safe haven gold is up because of the weakness in the US currency, and other metal prices are also doing well, particularly copper, and this is because apart from rising demand in China, we also have reports that China may ban the imports of certain types of scrap metal, so this has boosted the price of metals such as copper, aluminium, and so on. So we're seeing copper prices at the moment at a 2-year high of $2.8815 per ton. It's been a fairly quiet day for economic data, though. We did have Australian import prices which came in below expectations. They actually declined in the second quarter, though the Aussie, this didn't have much impact on the Aussie. We did have German GfK consumer sentiment, which beat expectations. Later on, though, the main focus will be US durable goods and the weekly jobless claims. That's it from me. Thank you very much for watching, and have a great day.